Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And as we start this show off, what do we have? A market that closed up kind of about, it was about 10 points, wasn't it? See if I can actually find this. I've got a ton of stuff up on my screen. Yeah, 10 points. 2187 on the S&P cash. Volume coming in at about 3.8 billion shares. When we look at some of the other markets out here, 53.33.97 on the NASDAQ, up almost 40 points. And what do we have on the Dow Jones? 18,903.82. And so some decent volume. The volume has been coming down. We'll look at a chart on that. But the last 1, 2, 3, 4, 5 days, this will be the 6th day of declining volume after the elections. So we'll get into that a little bit. But you wanted to kind of see this thing bust through, why it had lots of juice. May have used a lot of energy trying to get through it. We'll discover and talk about that a little bit. As always, at least on my show, we like to get started with a little bit of history to get things started.
Then it's all just a little bit of history repeating.
And what do we have going on out here today? In 1999, for the first time, more than 1.5 billion shares changed hands on the NASDAQ stock market, and in a single day. So now we're kind of getting into that same kind of volume. That is, what did I get out here? Volume 1.95 billion shares today, so significantly more. Just a few years before this, there weren't any discount brokers. Volume was very, very light. But as we got to 1999, the discount or the dot-com bubble, everybody and their dog was trading and got the kind of volume. But here almost 16, 17 years later, pretty much around the same thing. And if you've just tuned in, this is the Tom O'Brien Show. This is Dave White sitting in for it, normally doing my Power Trading Hour. And I may have said that just from being so used to it. In the meantime, Tom will be back on Monday. We'll venture through most of the different markets out here today. As we discussed, got more things going on, including earnings after the bell. We'll go through some of the ones that had earnings today. And in the meantime, if you'd like, you can always email me at PATH. That's P-A-T-H at TFNN.com. You can call me at 877-927-6648. Or you can post a message in the den if you would like. What else do we have going on out here today? Well, after the bell, we said there will be a few. We'll talk about them. Post Holdings, Ross Stores, the clothes retailer, CRM, which is Salesforce.com, and Williams-Sonoma, the big ones tonight. In the morning, not much going on. I think it's Foot Locker, and that will be it. And then we get into next week. And, of course, as we get into Thanksgiving, pretty much all the earnings are over until we get into January again. So there's not going to be a lot to push this market around. Earlier in the day, we had Janet Yellen yakking and didn't say a whole lot. Was, on the most part, a little bit dovish, but very hard to get into that dovishness after we saw that new housing starts were up 25% for the month. And generally that happens just before the end and the highs of a housing market. The reason why interest rates continue to go down, everybody waits till the absolute last minute to buy a house. And then all of a sudden you see everybody lock those in for houses being built over the next 6 months. I guess, I don't know, maybe it's different. Down here, from the time they break ground to the time you move in is about 9 months. So we'll see how things go. But those giant numbers pretty much put the kibosh on no more interest rate hikes out there next year. That directly affected the gold stocks and gold itself. My guess is that once, in fact, when I was talking to Andy Heck last week, was it on his show, my show? Maybe it was just on the phone. We were talking, and I thought anything below 1240 pretty much broke the back of gold in the meantime, and probably look at about 1180 on the gold contract. Of course, we've got the futures on gold rolling over next week. Sometimes that's an excellent time to wash all the weak hands out of gold contracts. But we've also seen some other things. Some of the bigger men on Wall Street took off after the elections looked like maybe they wouldn't be going the way that everybody thought they would, and promptly started selling gold. Unclear whether they're done selling gold or not, but certainly it is a little tougher out here to see it. Salesforce after the bell is up about 5 points. Had a fairly decent level of short interest, and we'll see what that does for it. CRM. And what do we have? Applied Materials, Tesla. Just looking over here at the side here. Okay, so that puts us back up to about the $80 mark, not up through. We got a couple of highs up here, 83 and 84 bucks, but that'll put us pretty much right back into this gap down. This gap happened on the 19th of August with 33 million shares. So you're looking tomorrow for this thing to come up, probably get into the $82 or $83 level. I will take a quick look at CRM and see just how short people are out here on this one. The problem is that this thing perpetually has a price to earnings multiple in the 60s and 70s, tends to have a huge amount of people shorting. And yes, yesterday we saw people come in almost double the average of short sales starts with about 16% yesterday. I'll see what we have tonight and talk about it on my show tomorrow. But too many shorting. This is a time of the year where it is kind of tough to be short, no matter how weak the market is. We'll talk more about that in just a minute.